Good morning, Colorado. Today is Friday, the 19th of August, and I'm Randy Flood, the only certified mortgage coach in the state of Colorado. There is no scheduled news today, so mostly what I'll be covering is going to be in the summary. But let's go on and take a look at the market. The market continues to trade in a sideways fashion, which is good, and this is what I've been saying, because the market has gone so great within the bond market, which has produced super low interest rates. And when you go up, in such a vertical climb, typically you'll have a major correction, and you can still see we're above the 10-day moving average. Technically, we're going to be coming back down here, but right now all this is very, very healthy. This is what some of the other market services, timing services are recommending. Rate alert, once again, lock within 7 days, float after 15, but they're really suggesting locking, especially until the 10-year note breaks below the 2%. And what I was going to say is, and I'll cover this in the summary, but the bond yields have gone down 1.25%. Within just a short period of time, and this is unheard of. But once again, the lower the yield, lower the interest rate. So all that is good. The daily rate lock advisory, their position is still unchanged. If you have a loan closing within the 20 days, go on and lock it. Otherwise, go on and float. In summary, the Dow is down again. No surprise. The financials are taking the brunt of it. As I mentioned yesterday, Bank of America is really hurting. The 10-year bond has dropped to by over almost 1.25%, and they've done it in a very quickly time fashion. And what that translates into is much lower rates, and all that is good for the consumer. However, it's not good for all the people that are out of work, manufacturing, the businesses, and everything else. Now, yesterday's bond run, which was great, was sparked primarily by the Philly Fed. And, as far as their outlook, it was a minus 30. It was expected to be like a plus 3. Anything beyond below zero is looking toward recession. Now, back in 2001 and 2008, same thing happened. So I expect we will be in a recession if we're not already in it. But I don't believe the media will be saying anything for another 2 to 3 months. They don't want the recession word coming out. Now, the Dow beating yesterday, which was significant, was mostly due to the global concerns. And there's still a lot of concerns, and there's a lot of reasons for that. And the Euro bank situation is especially explosive because they're wondering how to pay the bills. They may actually default, and we're all interlinked together. And the bad part is we're only at the beginning stages. I think we still have another several years to go. It's going to be very volatile, which is also good for interest rates because when there's fear, what happens is the money goes from bonds and goes from stocks into bonds, which helps keep the rates low. Now, gold has once again spiked to a new record high, and that's because of the fear. Because gold is something that you can actually hold. It's a physical thing, but once again, it's really a commodity. It's more of a I don't know what else to do with my money type of thing. So when there's a lot of fear and uncertainty, that's where people do. What people do. They put it in gold. Now, the thought of the day: fall 7 times, stand up 8. Chinese proverb. And considering everything that happened to Japan this year, to include their slowing economy, I think this really applies to us as individuals and also to our economy. We fall, but we always get right back up, and that's the attitude we need to have during these trying times. If you're looking for buying or refinancing, definitely give me a call. I will advise you and let you know what's going on. And as always, only wanting the best for you.